Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello and welcome to ThePrint. Neelkanth Mishra has a long and technical title. He is the co-head of Asia Pacific Strategy and the India Equity Strategist for Credit Suisse. Credit Suisse, for those of you who may not be familiar with, is one of the world's top financial services companies headquartered in Switzerland. For those of us who have known and tracked Neelkanth's work, he is one of India's foremost business and economy analysts. He is a regular columnist for some of India's top newspapers and magazines and is also seen on TV frequently sharing his insights. It is my pleasure today to introduce Neelkanth to the viewers of ThePrint as we launch a new show with him, Panchamantra with Neelkanth. Panchatantra we all know, but what is Panchamantra? Panchamantra is basically answers to 5 key questions by Neelkanth. Questions about the business sectors in the news and how macroeconomic policies and developments in the political economy affect them. Things like India's strategic dependence on imported energy, consumption by rich households, the surge in PE funding, and the evolution of our software companies, just to mention a couple of issues we tackle here on the show. Today, though, we will be talking about real estate or the housing sector, to be more specific. Neelkanth says the housing business cycle is turning, and he has even published a report on this earlier this month. Welcome to ThePrint, Neelkanth. It's a privilege to host you and launch this new show. And question number 1, or mantra number 1, if we can call it that, housing, as you will agree, is among the most basic requirements, and it is also among the most aspired positions for humankind, and an investment avenue for those with money to spare. It has also gone through its cycles in India. But let us first ask a very basic question. How many houses does India need to build? How important is it for the economy?
Thanks, Rajesh. Absolutely a privilege to be here. Thank you for starting the show. So India needs to build about 1 crore houses every year, right? While India's fertility rate has fallen, you must have seen the NFHS finding that the fertility rate is now 2. So, hum do, hamare do. Basically, over a period of time, population will stop growing. But over the next 2 decades at least, the population growth will continue, because this fertility rate shows up in overall population with a lag. In the next 5 years, population will still keep rising by about 1% a year. But the household size is also falling. So people are having fewer kids, household sizes are shrinking. So the number of households would be rising at 2.5% a year. On top of that, you have the number of houses per household rising. Like in India, that ratio is less than 1. So there are many households living in one house. In the US, for the last 50 years, the number of houses has been 10% higher than the number of households. In China, it is 20% higher than the number of households. So people own more than one house. In India, even to get to the same number of households will mean growth. On top of that, we have a lot of mixed-use dwellings. It's a technical term. What this means is people are sleeping in the shop that they work in. People are on the factory floor, they find some place and go to sleep. Now, as incomes grow, as regulations become tighter, this also has to fall. So this is an extremely important part of the economy. Finally, an economy is about providing goods and services to each other, right? So someone grows the food, we buy the food. I mean, you sell content and information, I generate content and information. So there is a lot of give and take, but housing is being one of the most basic needs, and one of the largest expenditure items for households is one of the most significant parts of the economy. At the peak in 2012, it was 18% of India's GDP. The gross value of output, the total value of dwellings built, was 18% of GDP. It has now fallen to close to 12% of GDP.
Neelkanth, question number two, or mantra number two, if we may call it that. Why then was construction so weak in the last 8 years?
Yes, and before we get to that question, I think it's important to add on the fact that the average size of the house keeps growing. So while we may need to build only 1 crore houses a year, it's a lot of houses, but the context of India's economy maybe not that large. The size of the house keeps expanding, right? So in the last decade or so, the average size of the house has grown by almost 2% a year. The average size of a house in China is growing at 4% a year. Even in the US, where the average size of a house is 5 times the size of an Indian house, there is a 1% growth every year. So over the last 35 years, the US houses have expanded on average by 1/3. Now, given all of this and the fact that there is a lot of demand for non-residential dwellings, what that means is that you and I have some space at home which has to be constructed, but we also have an office which needs to be constructed. On average, households in India have about 100 square feet per person, right? So 450, 460 square feet is the average size of an Indian house. And there are about 4.5, 4.6 people in every household, so 100 square feet per person. In the workspace also, you need at least 100, if not more, right? So there should be very strong demand for dwelling construction. But as you observe, the contribution of construction or dwelling construction to GDP has actually fallen very sharply. Mm-hmm. And the reason for this, I think, is the urban real estate cycle. Mm-hmm. On average, the land price appreciation in India, and remember, this is not an advice to go and buy a piece of land. In the last 30 years, rural land prices have grown at about 10% a year. Urban land prices have grown at about 11.5% a year. But between 2002 and 2013, the average increase was close to 19%. Mm-hmm. And when you see such an exceptional growth or in the value of land, there has to be a payback period, right? So between 2013 and 19, the appreciation in land prices in urban areas slowed down quite dramatically. And the reason is very simple, right? So there is a question of affordability. In any market, what we call, there's a clearing price. At that price, there are willing buyers and willing sellers. If the land prices and therefore house prices become too expensive, then people start pulling back from those purchases. What is also very important in India is that a large part of the housing market is still self-built. Mm-hmm. Just to give some perspective, only 0.2% of India's houses are in buildings with more than 10 stories. So only 2 out of 1,000 houses in India are in houses or buildings with more than 10 stories. 93% of India's houses are in buildings with 1 or 2 stories. So there's a lot of self-built construction. And what tends to happen is, if the land price appreciation has stalled, the sense of wealth, the sense of well-being that a landowner has, and therefore feels happy enough to upgrade the quality of construction, add a room, add a floor, I think all of that slows down. And that period of payback was this period between 2012 and 2021. Of course, 21 was also affected by the pandemic, where the pace of construction slowed down dramatically, right? So in nominal terms, the growth was just about the pace of inflation. So in real terms, there was absolutely no growth, despite all the supportive underlying demand trends we talked about, that is growing number of households, growing house sizes, improving quality of houses. Despite that, there was almost no growth in the quantum of construction.
This is not the next question, Neelkanth, just an aside and an observation. This is so counterintuitive to what we keep hearing as an general common perception. Land prices will always appreciate a great deal. Apartment prices will always appreciate a great deal. It's always a great investment, real estate. But the data tells us something else.
Absolutely. So while over a period of time, given that the quantum of land is the same and the population keeps growing, and the uses of land keep getting more diverse. If people generally, as they become wealthier, they want bigger houses and they want more pieces of land, and there is more need for food. So agricultural land needs to expand. So the pressures on land are high as population keeps growing, of course, and people become wealthier. Land prices will rise, right? If there is inflation, most asset prices will rise, right? So equity prices go up and all that. But there are cycles, and what happens, for example, what happened between 2003-4 and 2006-7 is that as the economy was taking off, and people were getting wealthier, people's incomes were rising, and they had generally an optimistic tilt towards the future, they all wanted to buy houses, better quality houses than the ones they were living in. But India could not add those many houses. There is a 3 to 4 year cycle for getting approvals, and then a very slow pace of construction. So as supply got reduced, the house prices started shooting up, right? So the developers and even pieces of land prices, right? So as that goes up, there is an even bigger hunger to buy more, and these are called normal cyclical trends, where then prices go well above where they need to go, and then there needs to be a period of correction. These cycles, as you would imagine, are much less extreme in rural areas, because in rural areas, people speculate on land for farming purposes or if someone has surplus money, but in general, house construction is not cyclical. Whereas in the urban areas, just to give you numbers, that in the top 7 cities, the tier 1 developers built 300,000 houses, 3 lakh houses in the year 2010. In each of the last 6 years, they've built less than 150,000 houses. So there was a period where they started getting the approvals from 2006, or seeking approvals from 2006. They started the construction, and by the time they delivered, the house prices were so expensive that very soon there was an overbuild, and there needed to be a period of consolidation and correction.
And I have another connected question to that before we move to the third main one, Neelkanth. And this is to do, you mentioned 0.2% of India lives in constructions which are less than 10 floors. And we living in these big cities, and especially, where we are in Delhi, NCR, I don't know if that is true about Mumbai, where you live. We have these massive, huge towers, which are just there empty or being constructed, and they don't have buyers. How do you explain that demand supply mismatch?
Yeah, so see, these big cities are large, of course. So Mumbai, the MMR has 1.4, 1.5 crore people. NCR has 1.8 crore people. But still, India has nearly 135, 140 crore people. Even if you think about just the urban areas, we're talking about more than 40 crore people, and therefore the housing market, if you just step out of some of these big cities, is mostly self-built housing, right? Mostly small contractors who are hired, who then get their own workers, who do all the purchasing, and then in front of the owner's eyes, the houses get built. Even this had gone through a down cycle. In some of the bigger cities, though, the housing inventory is now starting to fall. So in the last 5 years, I will say, 4+ years, we are now in the 5th year of that, the demand in the top cities has actually exceeded supply. So what happened after 2012-13, when prices went so high that they became more or less unaffordable, there were very few people who could afford it. That the developers who had taken on a lot of debt started to feel the stress. And whenever there is a boom like the one that we had seen at that time, all types of people think they can be developers. So there was this tutorials company in Mumbai, for example, which had a lot of, I guess, black money, and they bought a piece of land and they thought they could become a developer. Now, the thing is, it's not easy to sell products, to construct those buildings, to get all the approvals. And therefore, many of those had to fall by the wayside. And as the concerns around the real estate industry developed, then they then the financiers start withdrawing their lending lines, right? So people become uncomfortable lending to developers. And then, of course, we had demonetization, which actually tried to weed out a lot of the black money from the market. We had RERA, which forced the developers to become a lot more disciplined with the advance money they were getting from customers. And that forced a consolidation in the market. And so some of the inventories that you see around you are actually starting to get digested. And this momentum has picked up in particular over the last 12 months, which is a call we are making, that we are now close to seeing the inflection point where now fresh construction is needed.
So that was my next question. You say there is change in the air. What is changing?
Yeah, so quite a few things have changed. So the first is that the price signal is now positive. Just remember that for most people, I mean, unless you're a billionaire owner of a company, this is the largest purchase that you make in your life, right? And therefore, even a 3, 4, 5% change is a lot of money. So if there is apprehension that prices may fall, it creates a deterrence for further purchases. On the other hand, if you see a price signal that things have started to move up, the propensity to buy improves. So that's the first thing. And that's a very important one, that over the last 1.5 years, actually we saw during COVID prices collapsed. And then as the restrictions started opening up, prices started going up. And now in most cities, now they are well above pre-COVID levels. So the price signal is positive. So it makes sense for individual homeowners also to buy, as well as some investors who have made a lot of wealth in the stock market to start diversifying. That's the second point, that the wealth effects are very significant. So of the 14% of the overall stock market that is owned by retail investors individually, and plus about 8% that they own through mutual funds, the value of that has gone up significantly in the last 2 years, and that, I think, creates a wealth effect. So some people may just look at it in the bank account and feel very happy about it, but others will say, well, if I'm that wealthy, why don't I buy a bigger house? There is a third thing that is happening, which is especially in the IT-centric cities of Bangalore, Hyderabad, Chennai, Pune. So what has happened in the IT sector is that there is suddenly a surge in demand for engineers. And engineers can't be created overnight, right? So you can hire fresh engineers. There are enough engineers in India at a graduate level. But for the experienced cohort, the salary hikes are massive, right? So they're like 50 to 100% kind of hikes are absolutely common. Now, when you are 5 to 15 years into your career and your salary goes up that much, the first thing you want to do is maybe buy a better car. The second you want to do is get into a bigger house. And therefore, real estate markets in these cities, so 75% of India's IT workforce is in Bangalore, Hyderabad, Chennai, and Pune. So these cities, there is a significant increase in the demand for real estate. And of course, it comes with much more improved affordability. An additional point is that rents have been growing faster than real estate prices. And this is demonstrated by data published by RBI and the government, that rents have been growing, and rents as a percentage of total expenditure have actually come down. So in 2012, rents were 11.5% of total expenditure. Now they are 9.5% total expenditure, and still they have grown faster than the price of a house. And lastly, you have mortgage rates which are hitting record lows, right? And banks and non-banking companies are much more comfortable extending loans. So all of these factors have come together to drive a turnaround, and especially as ready-built inventory has disappeared. Right? So there was this period where there were completed houses which were unsold and they were sitting on developer balance sheets. Now that they've been cleared off, now the developers are also feeling comfortable about launching new projects. Some developers in Pune, for example, are talking about 40 to 50% CAGR in launches, like annualized growth rate in launches over the next 3 years.
Just that one point you made about mortgages, Neelkanth, Don't you think the interest rate cycle is now beginning to turn or will turn in the next, say, 12 months or next 18 months?
No, it is clearly, and it needs to, right? Because the economy is doing far better than most people think. And in fact, last quarter itself, it would have crossed pre-COVID levels, and very likely it will come close to pre-COVID path in the next 1 year or so. Which means that the excessive monetary accommodation or the interest rate cuts and the steps taken by the RBI will have to be withdrawn. And I think that would be the prudent thing to do. Mm-hmm. So, but look at what has happened to interest rates already. Mm-hmm. The 10-year Government of India bond yield, right, which is the what they call the long-term risk-free rate. So the 4% repo rate that the RBI sets is the short-term risk-free rate. The long-term risk-free rate is the Government of India cannot default, right? So that's already gone to pre-COVID levels. Yeah. So the 6.5% or 6.75% home loan rates that you see today is when the Government of India is borrowing at 6.36, 6.37%. Mm-hmm. So a meaningful increase on that is at least for now unlikely. The interesting thing is that this is still way below the 8% bottom that we had seen, which was a 15-year low. So we had last seen this in the 2009 at post-crisis period where there was a teaser rate of 8%. And so even if the 6.5 goes to 7, it would be one of the lowest rates India has ever had for mortgages. So it's one of the many factors though, and there are many others. I mean, the price signal, the income growth, and the shortage of inventory, the IT sector wage hikes, the financial savings that people have had. See, this is in many ways a transfer from the rich to the poor. Okay. Right? Meaning that what you need for economic activity is that someone needs to take a risk, right? So someone needs to start a company, grow a company, add a new office, add a new factory. For the household, it means the purchase of a house. Mm-hmm. Because in theory, once you bought the house, it's an illiquid asset. Its prices could fall by 50% the next day, right? In theory. If there was a third wave and the economy goes through another downturn. So someone taking a risk of that magnitude is actually a stimulus to the economy. Mm-hmm. Because what it does, it triggers the demand for fresh construction. And what does fresh construction mean? It means demand for cement, steel, a lot of construction labor, and which is the biggest employer after agriculture. Mm-hmm. And in a way, it is a transfer from the rich to the poor. And this acts as a stimulus to the economy.
Fantastic. In your paper you published very recently, Neelkanth, you talked about how the down cycle in urban housing construction shaved 1.1 percentage points per year of GDP growth from 2013 to 2020. So this change, I mean, what does it mean for the overall larger economy? That's question number 4.
Yeah, so you're right. This is so substantial. So if dwelling construction, residential plus non-residential was 18% and is now fallen to slightly about 12. That decline in growth from what is trend growth, that every year you need a certain number of houses, but suddenly you're building a lot fewer than that, was partly a give back to the excessive growth that happened before that, but it meant that there was a drop in demand for cement, there was a drop in demand for construction labor, for tiles, for steel, for plywood, for sanitary fittings, and sand and transportation, construction. So it's a very large sector. Yeah. And so that 1.1 percentage that we calculated is that, if this is trend growth, this is where your demand is growing, and you may have had an overshoot before that, but then for many years, you've been growing below trend. What we are saying is that now that the cycle is inflecting and we go back to trend growth in, say, 3 to 4 years, because we are picking up now, so the drag on the economy will start reducing. So when we say that we used to grow at 8 to 9%, and now we are growing at, pre-COVID, we are growing at about 6.5%. One major reason for that decline was weaker real estate markets, weaker real estate construction. And as that starts to pick up, the likelihood of the 6.5 becoming 7 or maybe crossing 7, say 2-3 years down the line, is then improves dramatically, because this boosts demand for a large set of inputs. It also boosts demand for construction labor. And just to remind you, this is one of the biggest problems for policymakers today, right? That Narega demand is about 1 crore higher than 2 years back.
Yeah.
Right? That there are people who have gone back from cities. There are private schools that have shut down, so those people are now calling themselves farmers again. Yeah. And getting them back, getting them productive work again is one of the biggest challenges. So if the real estate market was to really take off, and I think it will help absorb all of that construction labor as well. So we think that this can add 20 to 80 basis points, which is 0.2 to 0.8 percent points to GDP growth in the next 5 years. So it in this year, almost nothing, meaning that sale of real estate of a built-up house doesn't add to GDP, right? And it is only when fresh construction starts that GDP really picks up. And we expect that to start happening now, and next year we'll see the impact of that.
And the point you made about Narega, where it has been reported in the last few weeks that the government has run out of the budgetary allocation and they have to make fresh allocations, probably through a supplementary grant, shows that the demand for work through Narega has just shot up in these lockdown post-second wave months.
Correct. Yeah. And that is indeed a policy challenge, which is why the government has also extended this 5 kg per person scheme to for another 4 months. Yeah. Because that scheme has been proven to be less leaky, quite effective, despite knowing that much of this grain is actually then resold in the market. But it's a cash alternative in some sense. But it's a scheme that has worked, and I think so. This is so as the economy opens up, right? So as the primary schools restart, as international travel restarts, as marriages restart, like that's when you need a lot of temporary workers. As corporate launches, events, so all of those things restart. The need for workers will rise, and or even like trains restarting, right? So think about all the small eateries, small shops that exist outside railway stations, which cater to passengers. There are no passengers and they have no job, and so all the people who are cooking there, serving there, cleaning there, they have no jobs. Yeah. So as the economy normalizes, I expect that some of this pressure on the Narega that we are seeing on the Narega side, Narega is a symptom. The high demand for Narega is a symptom. So that will start to ease, and hopefully by early next fiscal year, the economy will be closer to normalcy.
Just another supplementary point there, Neelkanth. This extension of the free grain scheme for another 4 months, does that not act as a disincentive for people to come back to their jobs?
I don't think so. See, the thing is, at any point, any intervention has pluses and minuses. But look at it this way: Narega work is 202 rupees a day, and unlike the unemployment allowance that you get in the US or in Europe, here you have to work. You have to work in the sun or the rain or construction to get 200 rupees. 5 kilos of grain is 100-200 rupees, right? I mean, so I don't think this is large enough. This is sufficient to prevent starvation. This is sufficient to give some surplus cash to households, but I think it's too low to be a deterrent for people to come back.
So we come to our last question, and it's a very obvious question. There are always challenges when there is such a turn taking place in the cycle. What are the challenges here, Neelkanth?
So the biggest is that the industry has atrophied, right? So there used to be 30,000-40,000 construction companies earlier. Unfortunately, the last measurement was quite a while back, so we don't know exactly how many, but there were tens of thousands of construction companies. And if you don't have good work for 8-10 years, that industry atrophies. Now, they play a very important role. So remember that 83% of the workforce in construction is unskilled. Right now, so to be able to source them, this is also a cohort which tends to have very high levels of attrition. Right. So to be able to manage with unskilled workers and deliver something which has to, withstand 50 years of rain, sunlight, earthquakes, and all of that is a very important service in the economy. But that supply has been sort of reduced because of a sustained downturn. So whenever we get out of a downturn in any economy and any sector, for example, look at energy prices, right? So as the global economy has gone from, say, if they were at 100 pre-COVID and they fell to 85 at the worst of the lockdowns, and they get to 95. Now, as the 95 goes to 100, we are seeing that a lot of new oil fields have to start output, a lot of gas fields have to restart output. Those people had mothballed in the 18 months back, now have to be given a price signal that, look, it's going to be very attractive. Don't worry, you'll not have to fire people again and you come back into the market. So that process can be quite disruptive. In the coming back to our example, in the real estate space, as the builders start launching new projects, they may very quickly run out of construction companies because there may be unemployment in the villages, there may be demand for construction, but the intermediaries are missing. The same would be the challenge for the approval processes, right? So if we don't speed up the process of approval, so it shouldn't take 4 years for a real estate project to get approved, because if the demand signal is coming today and the supply is coming 4 years later, we are necessarily creating another vicious price spike, which then by the time the supply comes is already starting to weaken, and then that's unnecessary volatility in the economy. And the last point is financing. See, the way the real estate market works is that some developer buys a piece of land, then constructs on it, and then sells. Now, how do you get the financing for construction, right? So you can't put all of that equity in, so you will end up borrowing. Now, if the financing companies are still averse to financing real estate construction, and the buyers, for good reason, are averse to buying stuff which is, so that's where the price signal is helpful. But shortage of construction financing could also be a bottleneck to a speedy revival in the industry.
Thank you so much, Neelkanth. That was a fantastic masterclass on the housing sector. And I'm sure our viewers gained as much as I did, if not more, from your insights. We look forward to our next episode of Panchamantra with Neelkanth. Stay tuned for our announcement, and don't forget to take a YouTube membership if you already have not. Until next time, take care and stay safe.
Thank you, Rajesh.